Hi all, welcome to the Daily Charts. My name is Michael and I'm the analyst and content creator here on the channel. In this video, 30 minutes, give or take, we want to discuss a super important topic for day traders. How to start day trading as a business. Because day trading, if you want to be successful, is a business. Now, most people think that day trading is just about reading the charts. Others think that they're going to come in at 9:30 and by 10 a.m. they're going to be already at the beach sipping pina coladas and having their accounts full. This is why many those that don't have the commitment and don't take enough time to learn this business will fail. The truth is that trading is basically a business like any other business. Basically, it's a business like being a pilot, being a dentist, being a driver, being anything that's a one-man show. In the next 30 minutes, I'm going to walk you through the exact business plan. How much capital you need to start. What is the training and the training plan that you require. How much do you need to practice. And basically, how to take you from a hobbyist or somebody that's daydreaming about taking this profession and this profession and excelling at it and into being a respectable, profitable day trader. And this process will take some time, will take some sacrifice from you, but it's a doable thing, because as much as many people excel in being a pilot or a dentist, you can excel at becoming a day trader. You just need to apply yourself, have the commitment, because the potential is there. Now let's talk a little bit about the potential. What does it mean to be a day trader? What kind of markets you're going to day trade? So in front of you, as you can see, we have a map of various markets. You can see TSX, that's the Canadian market. Dow Jones is one of the indexes in the US. Then we have the Nasdaq and the S&P 500, which is basically the most important indicator for what the US markets are doing today. So if the number is 1.6%, and then now the timing is 10 a.m. So at this point, the S&P 500 is up 1.6% versus the close of the previous day, which was Wednesday. Now, again, those are not the only markets that you can trade as a day trader. You can trade Forex, you can trade gold or natural gas or oil, which are commodities. And you can trade Forex. Sorry, you can trade Bitcoin, and sometimes you will trade Bitcoin if you so desire. But basically, the core business of day trading is the US equity markets. Why the US equity markets? Because in order to make money every day, and that's the definition of a day trader, you open the positions and close them by the end of the trading day. So day trader, you want to take advantage of the full trading day, and you can take advantage of the full trading day trading 6.5 hours the US equity markets. Now, can you be a day trader trading Bitcoin? Bitcoin trades 24 hours per day. Can you be in front of the charts 24 hours per day? Forex trades 24 hours per day. Commodities trade some of them, if not all of them, the important one 24 hours per day. So the benefit of trading the US equity markets is that you can apply with yourself, come to work, start at 9:30, by 4 p.m. you're done. This is your working day, 6.5 hours. Now, looking at other jobs, you know, a dentist is working sometimes 8 hours. A lawyer will work 12 hours. A driver will work sometimes 14 hours. A pilot can work also 10 to 12 hours per day. Maybe less if you are a pilot. A day trader will work 6.5 hours. So those are coming in with those ridiculous ideas. I'm coming in at 9:30, by 10 a.m. I'm at the beach sipping pina coladas after making thousands of dollars. That's wishful thinking. That's not happening. Maybe it's happening for a short period of time for some traders by the idea here that if you want to be a professional, you want to apply yourself, you want to have a job, and this is the job that you can have. Anywhere between 9:30 and 4 p.m. you need to trade. Now, why trade US equity markets versus Forex or Bitcoin or any other crypto or indexes or ETFs? Now let's take a look at stocks. Okay, this is a list of some stocks. As you can see, some of them are, let's say the platform is calling them here top gainers. We have here the hit list, which lists the most important stocks in the market. Now let's go back to profitability. If you are a trader, okay, you need to make money every day. Maybe you won't be able to make money every day, but a dentist makes money every day. Let's say on Monday he has 10 customers, on Tuesday 4 customers, on Wednesday 3 customers, and each customer pays a different fee. Sometimes a customer will book an appointment and won't show up, and sometimes the customer won't pay after you work for him for, I don't know, whatever. Anyway, the idea here is that you need to get paid every day when you're coming to work. You're not going to be able to do it, but the potential is there. So what do I mean by potential? Let me give you an example. I'm looking at a stock here. Let's take a look at this one, PACS. PACS. Hold on a second, guys. PACS. The price of the stock is $26 and it's up today 57%. Okay, so the stock is moving up 57%. MDNR, the price is $2, it's up 56%. CRNC price is $12, up 50%, and so forth. So the idea here that in order to make money trading stocks, you need to trade stocks that are volatile, that are moving. So if, let's say, a stock is moving between 100 and 110, so you have $10 of intraday movement where you can make money. Either you buy 10 shares or 1,000 shares, it doesn't really matter, but the idea that you have the potential. On the other hand, you can have a stock that's moving between 100 and 101. So it makes sense that you can make more money in a stock that's moving between 100 and 110 in a given day versus a stock that's moving between 100 and 101. So the idea here is that you're putting money to work, some of your capital in a position, and the position is moving up 50%. So let's say you put $20,000 in a position, the stock is moving up 50% intraday. Is it possible? It's not really possible, but let's say it is. Okay, so in this case, you put to work $20,000, the stock is moving up 50%, you cash in $10,000. I know it sounds fishy and not really the truth. It's not. It's actually fishy and not true. But at least it gives you a perspective that, okay, maybe I cannot capture out of the 50%, the whole 50%. Can I capture 15% out of the 50%? Obviously, if the stock is moving up only 1%, I will capture probably nothing. So why are we day trading US stocks? First of all, because we have a lot of them. We have thousands of them. Then we can screen them down to a list of anywhere between 10 and 30. So out of thousands that are moving up and down, some of them are moving up 0.5%, others are moving down 0.5%. Most of them will move pretty much like the S&P 500. So if we run a survey today, most of the stocks will be up 1.6%, which is the S&P 500 index. Those who belong in the Nasdaq will probably look like the Nasdaq index, which is moving up 2%. So those are the averages today, but this is way above average. Okay, now if you want to make money, you want to trade. Let's say you have $20,000 in your position. You're buying a position of $20,000, and it's moving in your favor 3%. So you're making there $600. You take another position of $20,000, it's moving 4%. You're making $800. So now what happens if you lose money? Because this is also a possibility. You enter a position of $20,000 and it moves against you 5%. Is it acceptable to lose $1,000 on a position that you put to work and lose 5%? You'll see if you continue with this program that it's not feasible. You need to work your way in such a trade your way in such a manner that when you make money, you make at least 3% per position, and if you lose money, you lose maximum 1% per position. So why is it feasible? First of all, it's feasible almost all of the time, and it's feasible because the liquidity of the stocks that you're going to be able to trade is tremendous. So the US equity markets are the most liquid markets in the world. So if you're going to put a stop loss, and if you don't know what the stop loss is, it's going to be clear. We're going to clear it out in a bit, and you'll see examples. You're going to put let's say I'm buying a stock at 100, and my stop loss is 1%, and that my stop loss is at 99. So when the stock reaches 99, there's going to be an order that tells the broker, sell my position, and there will be 99% of the time a buyer at 99. Okay, not 100% of the time, but 99% of the time. Why? Because you can choose to trade the most liquid stocks out of these 8,000 to 9,000 stocks that are trading basically every day. Okay, so now we understand why it's feasible to make money, because some of the stocks, as you can see, are very volatile. And now let's take a look. How much money can you make? So let's say you're a novice trader. You have $20,000 in your account. I know that in the US you need more. In Europe you don't need it as much, but I'm just rounding things up. So you have $20,000 in your account, and you can leverage your position because you are a day trader, and the broker will let you open 4 positions of $20,000 at the same time, or 1 position of $80,000. But in this case, let's talk about a maximum position of $20,000. So you have a position of $20,000, and it starts trading, and it loses 1%. And then you're down obviously $200. And then you buy another position, and this one makes 5%. You're up $800. And the third day is going to be a stock that it's not moving up or not down, and you're going to stop out at the entry. You're not making money or losing money. So basically you lost 200, made 800. Overall you made $600 on three trades. Okay, so that's obviously a reasonable example. Now, is $600 times 20 trading days on average your target? Or maybe your target is to make $100,000 per month, or maybe your target is to make $300 a month, or $500. I don't know. This is your target. Okay, that's personal target. We're going to teach you in this program how to make 1% loss per trade maximum, and 3% to 10% per trade if the trade is winning. And now it depends on your strategy, your personal drive, how many trades you're going to take per day. I cannot give an absolute target, but it makes sense to me that if you, after 6 months of practicing and learning and applying yourself, you need to make anywhere between $1,000 and I would say $1,500 per day. Okay, there will be losing days, but on average this should be your go-to target, 1,000 to 1,500. Again, using the basis of $20,000 position per one trade. Now, if you have more money and you want to put to work $40,000 position, I still think that start with $20,000 and grow fast. If you have only $20,000 position or $10,000, to fund your account, you start whatever you can afford. I think $20,000 is a reasonable capital to start, learn, and after 6 months start profiting, maybe even less. Okay, depends on your how much time you apply yourself, and on your ability to read charts, on your ability to understand what's going on. Sometimes for some people it doesn't work out. Or so as much as some people are starting law school and maybe 5, 10 or 20% decide it's not for them, not because they cannot do it, it's just not their business venture, or to their, let's put it this way, to their interest to continue and finishing their title and diploma and becoming lawyers. The same can go for a dentist, or for an accountant, for a driver, or for a pilot. Some of those guys want to go to the finish line. So now let's talk a little bit about the motivation, why day trading is such a, I think, a great business. Let's start with the trading hours. If you live in the US, you start at 9:30 Eastern time. By 4 p.m. you're done. So you have your whole evening in front of yourself. You work from home. You don't need to travel into work an hour or whatever you need to do per day. The capital that you need to invest is relatively very small versus other, let's say a dentist. You need to apply yourself and for 4 or 5 years, and then buy expensive machinery and rent an office and so forth. Okay guys, now let's see some examples. As you can see on my platform, there are nearly 8,000 stocks trading in the US equity markets. So can we follow all of them? No. Do we want to follow all of them? No. We want to follow a very distinct list, like I said, up to 30 stock. From those, this particular list, we want to draw the best trades that we can find during the trading day. So let's go and take a look at the list. It's already prepared. I already prepared it. Let's take a look. The market is very strong today, and I have 11 matches on my long list of stocks that are anywhere up between 56% PACS and 7% CLSK. Their volume is at least 4 million shares. They are up at least 4%. The intraday range is at least 5%, and the price is over $10. So those are my requirements. Why is that? Let's not spend time on that right now. So the idea here is that I have 11 stocks, and it's now 10:30 in the morning, not even that, but that I can go and start trading. And on the red side of the market, being that the market is, as you can see, up nearly 1.5% and 2% of the Nasdaq, I have only one stock to watch at this point. Okay. On a normal day, it will be more like 10 and 10. Because the market is very strong today, I have only one stock to short, and those who don't know what short is, we will talk about it in a different time, different manner. But again, the idea here that I can play with these numbers and add, in this case, stocks to this list. But I'm not interested. Let's go to the green side of the market and see what does it mean to trade the US equity markets. Okay, let's see this stock, for example. The name of the stock, the symbol of the stock is CRNC. The name is Karen's. Okay, whatever. As you can see, it's up nearly 50%. Why is it up 50%? Probably because of great earnings. Maybe there are other additional great news. But the idea here is that you are as a trader and you want to buy a $20,000 position. So a $20,000 position, in this case, let's average things down. The price of the stock is $12. 1,000 shares is $1,200. So it's going to be like anywhere between 17 and 1,800 shares. Now, where do you buy it? This is basically the whole business. So let's say you buy, I'm going to give you an example. Let's say you buy the stock at 10.40, okay, and buy now, or 10.50, and by now the stock is nearly at 12. So the stock is up intraday between 10:30 where you bought it and 12, nearly 10%. Can you make money if you put to work $20,000 and it's up 12%? Sorry, 10%? That's according to my math, it's plus $2,000. Okay. Now, why would you even buy CRNC? So let's go back to the list itself. As you can see, CRNC is number 2 on the list. If the stock is number 2 on the list of gainers, I called it green. I have the name red for the stock that are basically losing. So again, it's not by mistake that this stock is up 50%. Something great happened. Now, can I make 10% on every trade? No, but I can make 3% on one trade, 3% on another trade, 3% on another trade, and then lose 4% on another trade. Sorry, 1% on another trade, have 4 losses, and the three trades that made me 9%, and 4 trades that made me minus 4%, and I am going to end up the trading day with 5% winner on $20,000. That's $1,000. So again, the idea here is that at the beginning, don't expect much from yourself, but we can teach you, or you can teach yourself using our amazing library of content on the daily charts, that you can take trades, use the stop loss. You know what? Let me give you an example how the stop loss is being used. Okay, guys, pay attention. The yellow line is the buy line. So I'm going to buy at 1050, 1800 shares. That's my whole position of $20,000. And I'm going to place my stop loss at 1038. That's roughly 11%, so it's not going to be exactly 1%. It's going to be a little bit more than 1%. Okay, but the idea here is that I'm going to look technically at the chart and place my stop loss, in this case under this yellow line, which is a VWAP. Of course, we're not going to talk about it right now. So again, the idea here, I'm buying at 1050, my stop loss is at 1037. Now if the stock moves higher, okay, at one point it hits 12, and I can sell at 12 here, and I can sell at 12 here, and I can move my stop loss in the money. We're not going to obviously learn right now how to manage trades, but the idea here is that the stock is moving up $1.50. Okay, it's a $10 stock, so $1.50 is way more than 10%. I'm just giving you, an example. Now, if your target per day is 10%, basically you end up. This is your whole trading day. So this is your whole $2,000 plus. But again, the idea here is to be professional and treat it like a business. So you had a good day I don't know, as a dentist, somebody came in the morning, you did a great job for him, whatever, you made five grand, okay, on the job, and you net 3. You're not gonna close down the shop and not expect accept any more customers or patients in the same day. You're gonna continue working. It's the same with day trading. You work your way until 3:30 p.m. and by 4 p.m. if you have any positions open, you close them. So again, the idea here, you need to be professional. You need to trade as much. At the beginning you will trade 2, 3, 4 positions per day, and then you will go to 5, 6, 7, and eventually you will grow your capital, and instead of taking this position at $20,000, you'll take it at $25,000, maybe at $30,000, okay, maybe at $40,000. Keep in mind, the liquidity is amazing. Now, the volume already in this stock, okay, you can see the volume at the bottom is already, we're barely trading for an hour, 6 million shares. So this stock is going to trade 15 million shares. Your 2,000 shares or whatever shares you're going to take, it's nothing compared to the liquidity. Not to mention additional entry points, taking partial, managing anything like that. Now let's talk a little bit about the ability to work on the upside. As you can see, this is the upside of the market, and we have the ability to trade and work the downside of the market, which is called shorting. Okay, so let's talk a little bit, couple of minutes about shorting. So any market you can buy, obviously anything that you want, any stock. In the US equity markets, when trading US stocks, you have also the ability to short stocks and make money when the stock is moving down. So in this example, I have the ability to short, meaning sell the stock at 63. Somebody is going to buy it from me at 63, and I will be able to cover it, let's say at 61. So in this case, I'm buying the stock at 61. I already sold it at 63, so it's the opposite process. In this case, I'm making up $2 on the trade. Let's not talk about percentages because it's going to be way simpler. So let's say I shorted I sold 100 shares. The position went down $2. I made plus $200. Now, not all the stocks are available to short. Okay, not all the stocks, not all the time, but most of the stock that we're going to trade. And remember, we're talking about trading very, very liquid stocks. We will be able, most of them, to short them in any given time. So we have the ability to trade the market or buy the market when the market is moving up. We have the ability to sell or short the market or individual stocks when the market is moving down. So we are fully compliant with anything that's going on. Okay, so that's a virtue, a great ability that US equity markets have. Now let's recap and finish this presentation. Okay guys, now let's talk about what we as the daily charts can help you with. We have nearly 400 videos on our channel. Also, we have a full day trading course for free that you can practice for free. Okay, so you need to know, you need to have the capital, let's say $20,000. You need to learn for about 3 to 6 months. You need to practice. You have the ability to practice for free using a demo platform. Okay, so like I said, we can help you with everything, including hooking up with a full course for free, hooking up with the training also for free, and basically those who want to excel, we have those mentorship classes that we offer. Those are not for free, but anything else in this program, a demo which you can take from your broker, depends where you are in the world. Almost all of the brokers will give you a free demo. You can practice. We can help you with anything regarding your practice. And the idea here is that you want to take a mentorship and excel, that you can do with us one-on-one. That's basically our beef in this program. Hope it was clear enough. Do like and subscribe to our channel. Either you take the program or not. We'd love to have you here. Thanks for watching and being with us, and see you in our next video.